Hey everyone, Billy Rivero here. It's Saturday, July 9th of 2022. Yes, I just wanted to take my time today to record a video, just going over, the whole process of, setting up the trade, setting up the plan of attack, executing the trade, and what to look for, how to analyze the option chains, if you're day trading, if you're swing trading, it doesn't matter. And yeah, how just like the overall like mentality and mechanics of trading, it's nothing, it's not a rocket science, but these are things like little details that if you guys really apply when you're trading, I'm pretty sure it's going to change your life for good. Trust me, it changed my life. I don't see why it wouldn't change yours. All right. Yeah, first of all, let's just start. Let me just type in a random ticker here, right? A random ticker that we trade, right? For an example, let's go with Apple. You know, um, and then this workspace that you guys see over here, it's what I call like my exterminator modified. Um, and so what we got over here is, we have the daily chart, right? And then we have the tick, and we have the VIX. The VIX, I usually look at the VIX on the daily. But if I'm gonna time something, on a day trade, I may look into the 3 minute chart. The same thing with the tick, it's not something that I pay a lot of attention to if I'm day trading. But if I'm scalping, because every time I'm day trading, I'm basically using the level system. So I don't pay much attention to it. But if I'm scalping, I usually time it with the VIX and the tick. Right? Lately, there has been a divergence, which means it's not working as it used to. But it's something to good to always have in mind, right? So for an example, let's just go over Friday here, right? So you guys might ask me, so what EMAs and indicators I'm using here? Actually, they all should be out of here. I keep on deleting them and saving, but it's just like a thinkorswim issue. At this point, let's just get rid of them. And then we go over the plan of attack, right? I mean, the overall thought process, right? And then I'll explain what I got on my chart and the reason why, the ins and outs. All right, nothing to worry about. We'll get to it. This video might be a little long, fam, so I do apologize, but I think it's extremely important to just go over the whole mentality strategy. I do think it's extremely important. Right. First of all, let's say, we woke up here, Friday before the market opened. So and then so the first thing we need to do is, first of all, is set up our levels, right? Previous day high, previous day low, and see where it stands on the daily. I mean, on intraday, right? So, and the biggest thought process is, this is what we need to think, right? Over here on my daily chart, you guys are going to be seeing that on this work creative workspace, I have the counting channels. I don't use it. It's like every once in a while I'll take a look at it, but it's very unusual. But it is something good to pay attention to, right? Every once in a while, just so you see, like, are you above the +3 ATR? below the -3 ATR. And if you guys don't know, the ATR is all it is the average shoe range, which means if you're looking at the daily chart, it's basically the average that it moves on the day, right? So, and this is the thing. So starting with the levels here, we have the previous high and low of day, which was on Thursday, right? And then we always get that thing like, okay, so what if we gap up? What if we break the previous high of day? Where's the next support that I have? Which I mean is it's the nearest as far as price, not as far as date, right? So if it took out this high here, okay, so this level is a little too high. This one is good, and it kind of lines up with as you guys could see, the top of this wick, the bottom of this wick, and the bottom of this wick, right? So let's just turn it red, just so you could see the levels better. And then same thing to the downside. So what if it breaks to the downside? So where's gonna be my next support here? And then the guys could be like, oh, the previous day close. Since it's so close, it's at 143, and the previous low, the previous like day low, it was a 143.28. It's only 28 cents. So I want to grab something lower that also has confirmation, right? I want to see that a level tested at least like 2 to 3 times is a good indication that the level is decent, right? In this case, the bottom of this candle here, oops, sorry, the bottom of this candle, which is the previous open of this day, and the top of this wick right here, right? So, okay, and then what we do is we go into the intraday chart. So on intraday, okay, so previous day high and low. And then if it broke to the downside, this was the next level below. Let's turn that green. Right, just a different color so you know which one is which, right? And then something to pay attention to here is it's right where the 5 EMA is. You guys see these like lines that I have on the side of my chart? And they're gone out, you see? So just by the color, I know exactly what they are. These are the daily EMAs, SMAs, and weekly, EMA and SMA. So that way I don't have to go back into the daily to recognize where these magnets are, right? Because institutions, they do use the EMAs a lot to buy and sell, to short, stocks and, ETFs. So, which that tells me it's a really good sign, right? And then the whole thing is, right? And pay attention how the level that we picked above from the daily happened to be pretty much the high of day on Apple, right? So let's say for Apple, we usually use like $1.50. So what is the plan here? A pop into 146.55, we're gonna short, and a drop into 143.28, we're gonna go long, right? And then, of course, we usually grab these pre-market levels, right? Pre-market lows and highs, and I use a different color on them. Yeah, sorry, it's just like tosses. I don't even think it's gonna. Yeah, it's just giving me a bit of a hard time. So let's just go back there. Yeah, but as you guys know, so this pre-market low here, right? Which is the bottom of this wick. So yeah, let's just ignore that. So what happens is, for Apple, So we usually use about $1 to $1.50 of standard risk. So if you're using $1.50, it's gonna be like we're gonna get stopped out at 148, right? So 148 to the place they're gonna enter. You can draw the box there. But remember, this is prior to the open, right? And previous low of day, right here, 143.28. It didn't get anywhere in the air, but then you do the same thing. 143.28 minus 150, that's going to be 141. 72. Yeah, which is right near the 90 MA. Can you guys see like the 90 MA? It's right at 141.02. So 141.72. Okay, here we go. And that's it. So that's our stop, right? Actually 142.72. No, 141.72. That's right. Because yeah, that's just a pre-market level. This is just a pre-market level. That's why we got to use a different color so you recognize. And make sure like all your pre-market levels they're all the same color. So that way you recognize, oh, this is a pre-market level, right? Because otherwise, trust me, guys, it gets confusing, right? And this is an indicator that I created that all it is it's the pre-market open. It gives you the 4 o'clock, the 4 a.m., in the morning open, right? So let's say, and then, okay, so we had our strategy here, a pop into the 146.55, which was the previous high of day. Let's turn this red. So you guys see, I'm not just making this up, right? Okay, we're gonna short. So as you guys could see, pay attention how these levels, it really, really plays, fam, and it really, really works. So and the thing is, as it's pushing into the level, right? If you're buying puts, we want to make sure we're buying the puts on those green candles. We want to buy puts into strength. Oh, Billy, but why? That's crazy because what if it breaks out? So number one, it's not crazy. That's how you get the best fills, right? And then the reason why you have a standard risk is that if you get stopped out, you take a little loss and you restart. It's that simple, right? There are more, advanced things that we do, just adding to key places and selling, which is scaling in and out at really key places that it's pretty much impossible to lose money on a trade, but that's not what we're addressing here today. We're addressing purely just having a plan of attack, right? And so what do? We get in. As it starts coming down, what we need to do is pay ourselves on drops, on red candles when it's dropping, right? And recognize a place that it will potentially bounce. On this case here, we had the VWAP. So as it's coming down to the VWAP, you're selling, and then it broke the VWAP. So, and where was the place that it kind of got a little chopped up? It kind of got a little choppy. It was right at this level right here, right? So which means this, okay, broke the VWAP. Are you holding the runner? Right? If it breaks the VWAP to the upside, you can get out on your runner, or you can use the break of the 146.04. But since it broke the VWAP, I would like to see the VWAP holding as resistance. If it breaks the VWAP to the upside, you're out of the trade, right? You're out of the trade for a profit. You pick yourself along the way. So, okay, life is beautiful, right? Okay, so, and then I get asked a lot, right? So how do I pick the right options, the right strikes, right? And there's this thing here that's really important, fam. So if you talk to like 80, maybe 90% of the option traders, they're not gonna know the answer, right? How do you figure out how much the stock is gonna move, right? It doesn't mean that that's how much the stock is gonna move, but as an options traders, so that means how much the institutions, the market makers, the market makers are pricing the options based on. Okay, Billy, so that sounds interesting. So how do we know that? Okay, there's an easier way to know, right? And this easier way to know is by looking at the option chain. So on the option chain, let me switch my screen, and you guys will see right here on the option chain. So, okay, we type in Apple and we type in the expiration. So on that case, it was for the 8th of July, but okay, let's forget about that, right? Let's plan like it. Let's look at like this week's option chain. So how do we figure out the option chain? The price movement. Usually the best way is you grab a straddle. Oh, baby, what is a straddle? It is a call and put, add the money. So purple, if you're using Thinkorswim, it's 289 plus 225. That's about 534, right? But on Thinkorswim, if you look on the option chain to the right here, you're going to see the implied volatility, and they're going to give you like, right, more or less like the expected move right here, which is very close, right, to the straddle, $4.81. So going back to the other screen, so we already know the move. So if Apple is trading at 147, you're on Mondays, like you're on the first day of the week, we're second or third, as long as you're not trading the last 30 minutes on a Friday, right? And trading out of the money contracts, because that's gambling, right? So traders don't do that. Gamblers, they do. So it's anything within. So for an example, it's trading at $147, $147, 147.04. So plus 5, that's 152. 152 to the upside. In this case, they have the 152.50. You can stick to the 150, or to the downside, same thing. So 147 minus 5, it's 142. 142, 152. Right? So, and what happens is, since these contracts, fam, they're within the expected move, they tend to hold more value. Which means is institutions tend to price, it doesn't tend to melt as much as anything further out of the money. As long as they're trading within the expected move, it's okay. So I highly recommend, like everyone to get like in the money or one strikeout, so that way I believe it is the right way to do it. But there are times, like that we can get 2-3 strikes out of the money. So it all depends on the setup, right? So it all depends on what the market is giving us, the time and distance, the speed and distance. So that's all that matters. So going back to my other screen with the charts, right? So let's just revisit. Let's just revisit on here. So which means, okay, so a pop here into 147.46. You could have gotten the 142 puts. You brought it all the way down to 145.47, right? Boom, or grabbed it right here all the way to 145.47, 145.5. We need to realize, fam, how these stocks like price like $500 below, how they react to half and whole numbers. 139.50, 140, 140.50, 141. These are all really important things that we need to pay attention to, because institutions, they do buy and sell at those levels, at those numbers. They do that a lot, right? So, and unfortunately, okay, the long trigger here didn't, the long trade here didn't trigger, but, and then there's a way here that I can show you guys exactly, like if it didn't trigger. So what do? You wait for a setup to form, a double bottom, a higher low, right? Inverse head and shoulders. These simple setups that they are like over 100 years old, but hey, they're working all over again. But just don't expect them to be symmetrical. Sorry if I made a little noise here. So just don't expect them to be symmetrical, like that perfect head and shoulders, that perfect inverse head and shoulders, that perfect double top, right? So, and there's a whole psychology when it comes to that too, and some, tricks of the trade, right? So a little, things that we learn over the years, little tricks from seeing things over and over again, just repeating, and then you just catch it. Like, okay, all right, that's what you're doing, right? And so that is okay. So that is the best way to pick up like options chain. What happens is, all right, since we have a game plan, right? Okay, so on a pop to 144.35, for an example, right? We're gonna go long. On a drop to 144.35, we're gonna go long. On a pop into 146.55, we're gonna go short. You gotta have your amount of contracts and strikes ready. You do. So, and so how do we scale into the trade? A lot of people, they have a hard time just like scaling into the trade, right? So I'm gonna show you guys an easy and an effective way that I used and I still use today, right? Because a lot of times what happens is I I'm always a little early on the trade. And the reason why is I just want to grab those opposite candles. If I'm buying puts, I want to grab those red. If I'm buying calls, if I'm buying puts, I want to grab those green. If I'm buying calls, I want to grab those red candles, those big red candles, right? So I kind of sacrifice the price of the underlying a little bit just to get a better price of the option, right? And then scale in. So, but let's say, okay, so this is the thing that you need to know ahead of time. Like, what's the max amount that I'm willing to put into this trade? Let's say it's 2K. 2K. That's your max size. So how are you going to scale into this trade? So how do I do it, and what do I recommend? Right? So we have two ways. So we can start with half size, 50%, then add a quarter, and then another quarter. Or we can start with 25, and then 50%. But Billy, what do you mean? So if you have the levels, so we should start like that? Because the thing is, we're always assuming it's going to break. So, and that's why we got this other level here above, right? Because remember, so this trade here, it worked perfectly. The first trade worked perfectly off of the higher day. And then I was with the same thought process, right? So, okay, if it breaks the previous high of the day, where's the next resistance? Then you find it. So in your trading, you're assuming the same thing. So the first trade worked perfectly. Let's say you were to grab the double top here, right? You're like, oh yeah, I missed the trade, but it's coming back to a double top. So this is why I'm like, okay, this is why I start with either half a size or, or sometimes even a quarter size. Because number one, I want to scale. Like I said, I want to scale into the trade. I want to scale in. Because if those levels doesn't break, we add in confirmation, which is something more advanced that I'm not going to be addressing this today, because you could, if something goes wrong, it could take it could really make a mess, right? So in my thought process is, okay, as it's approaching to, if I was to take this double top, as it's approaching to this level, to this double top here, okay, I'll enter with half size, right? And okay, I do have we do have a really strong resistance above. So if it breaks and still within the standard risk, what I'm doing is at this other resistance, I'm adding another quarter, right? So okay, so that means I'll have like $1,500 on my 2,000 invested into this trade, right? And what do I do with my runners? As with my ads, I'm sorry, as they start coming down, I am paying myself. Let's say if it was like 5 contracts here, right, that I added. So I started with 10 contracts and I was gonna buy 5 and then 5. So those 5 contracts, as it starts pushing down, I'm selling them, right? Paying myself and prepared if it pushes back into this other resistance, I'm buying them back in, which means is, okay, so I sold 5. If it pushes back into that same resistance, I'm adding those 5 back. So, which is, it's really going to get you profitable, right? Because, okay, if you sold those 5 here or on its way, you would have made money on those 5 contracts, but you would have still been red. But listen, the trade didn't take you out. It doesn't take you out until the break of your standard risk, right? And we had another strong resistance above. So so what I'm doing is, all right, so as it's coming to retest this level, I'm like, okay, so it's interesting. So what do we got here? Oh, we got, okay, a lower high. I'm like, oh, it's pushing towards this level here. It could be a head and shoulders. I'm anticipating that it's a head and shoulders, and I want to buy the red candle. So, okay, I gave those 5 contracts back. And then as it starts coming down, right, on this level here, I'm paying myself. Boom. Okay, and what am I looking for? This white EMA is the 21. So what I want to happen is, okay, as long as the EMAs that you guys see here is the 21 and 50 EMA. So as it's coming down, all right, I'm starting to peel off. As long as it's holding the 21 or it tests the 21 and doesn't break, I'm still in the trade. So, and I know, okay, we have the VWAP approaching. So with those last 5 contracts that we added, I would be only holding 2 as it's pushing down to the VWAP and ready to add into this if it pushes back into this level, right? And then as you guys can see, so it held the 21 beautifully, and then boom, no reason to get out. The minute that it tested the 21 and broke, right, and then you're all out of the trade. You're not holding the position at all. The minute that, right? But this is the strategy for smaller accounts, right? Because if it's a bigger account, so I use a different type of standard risk and things like that. So basically, you grab the whole move here, right? And you were able not to have the 20 contracts, but you had 15 plus 5, 20. but you're not holding all the 20 at once, because if you were, if you had entered with the whole 20 right here, as it is pushing into this double top, trust me, most of you guys wouldn't have been able to take the heat. You guys would have been caught this for a loss, even though knowing that we had this standard risk. As long as it's trading within, right, within the standard risk box, we're not doing anything, right? Why? Because that we know this is it is a tested, like, it is a tested in truth, like, standard risk that really works. Over 200 trades taken live and some on demand to just grab the data to see like what works for each of the tickers that we trade, right? It's usually $1 in this market, since it's more volatile, $1.50. And then family, it's 99% sure that you guys are not going to get stopped out and the trade is going to work. If you guys, stick to the system and size up, if you guys size up properly and do exactly what I'm telling you. So it's impossible to lose money. It really is. It's very difficult to lose money. So, right? And then if you're talking about, right, okay, going long, but Billy, we never had an opportunity to go long. Well, we did, right? Our level, it never got there. But okay, so we did have this low here that it held, right? And then a double bottom, right? Almost like to the pin is right into it, and then it re-double bottomed, right? And then what happened? It pushed right to where? Previous high of day. Actually broke the high of day, right? So this is when I tell you. So if those levels, because trust me, fam, this is just like the skeleton of the level system. There's more into it where you would have been able to catch the bottom, right? Just like tweak these levels with the pre-market and some psychology, and you guys, it would have been 100% both ways. But hey, you don't rush, you wait for a setup. Okay, all right, so okay, I missed it. Okay, I'm gonna wait for a setup. Those setups, I mean, is double bottoms, double tops, head and shoulders, inverse head and shoulders. Extremely, extremely important. But there's something that you guys have to keep in mind, because if the stock has been trending down for days and it's having a green day, listen, if you grab the first and second double top, it's going to work. But after the second, it's most likely you're going to get chopped out, because eventually we're going to get some retracement, right? Same thing to the upside, right? It's been trading for days, like to the upside, and then you're having the first red day, right? The first double bottom is going to work. The second is going to work, right? But the third, it's most likely going to break. That's why you have to be very careful and always stick to your standard risk. So, because at the end of the day, fam, it's all about time and distance and standard risk. It's all about what's the meat. Okay, what do we have? A quarter pound of filet mignon, a whole pound, half a pound, an ounce. It's just being able to recognize that, and it's life changing. So, and that is part of the level system, something that I teach, and that I figured out on my own, and it really works for me. So it really works, and the results has been speaking for itself. Right? It's been very, very successful. I'm still able to keep the win rate to 98.5, 99%. The reason why it's not 100, I'm gonna be quite honest, because sometimes I have way too many positions on, and I just don't feel adding into the position. I'd rather, if I'm losing $120 or 1,200 when I'm making over 60,000, and I have a position that okay, if I focus on, I'll make another 50K, 20K, 2K, or 100K, whatever. I'm not going to worry about a position that's losing $1,200. I'm gonna put my focus on a position that can give me a huge return on my investment. And that's the beauty of options, right? If you time the options correctly, if you choose the right strike, family, the odds are in your favor. It is most likely you're going to succeed. It's almost impossible not to, if you stick to the game plan, if you stick to the strategy, which is not really a strategy. It's just the way the smart money flows. Because at the end of the day, I'm not trying to create anything over here. You know what I'm trying to do? I'm not trying to do anything either. You know what I'm doing at the end of the day? I'm following the smart money. And you know what? That's all I need to do. I don't need to do anything else. I don't need to focus on anything else. No fancy indicators, no fake indicators, none of that stuff. None of that stuff. All you need to do is focus on the smart money, how the smart money trades, how it flows. So now here's a question to you guys. Out of all these gurus that you guys know, how many of them have been able to be consistently profitable on a daily basis? How many of them? So yeah, please don't come up to me with a guy that's messing. Okay, so he's up on the year, but okay, because he nailed a home run there, but 99% of his trades are red trades. To me, he sucks. To me, he better find something else to do. In my opinion, in my vision, he shouldn't be trading, right? And just like be very careful with the information that's on the internet, because listen, people are gonna be like telling you, oh guys, you guys need all these indicators. Some of them are premium, some of them cost thousands of dollars. Oh guys, the RSI, the MACD, the slow stow. You know what? You don't need any of that if you know what you're doing. You don't need any of that stuff if you know what you're doing. If you understand a little bit about the move prior to the move, and what's the move that's done, what's the move that's due, what's the move that's way overdue, and the relation, the price action has to the institutions, EMAs and SMAs, which are called the institution magnets or institution train tracks, whatever you want to call. Hey, you don't need anything else, right? And I'm being that honest. So as a matter of fact, just to show you guys the chart that I've been trading lately. Let me just, okay, I'm just going to switch. Okay, here we go. So this is the chart that I've been trading lately, using to trade lately. I don't even have the VWAP here, so which I highly recommend the VWAP, right? The VWAP is a very important indicator if you're day trading. And why is that? Because that's where institutions are allowed to buy and sell. They cannot buy anything for their clients above the VWAP, neither below the VWAP. Right? So let me just get a chart here with the VWAP. This one has the VWAP. Okay, it has the VWAP in the 9 EMA for some reason here. I keep on forgetting to save them. So as you guys can see here, my daily, my weekly chart, and then like I said, guys, levels. This is all I need. This is all I use. And some psychology, and that's all I need. Nothing else. Everything else, hey, pay attention to all these gurus with the holy grail indicators, holy grail courses. Pay attention to how they're doing. All these big names, pay attention. Sign up to their services, ask them to send you their broker statement, right? Because if they're selling courses, and memberships and stuff. So they got to be profitable. If they're not profitable, they're ripping you off, right? If someone that's down for the year, is coming up with a new course and releasing a new course, listen, that is a rip off. In my opinion, a person like that deserves to be in jail, because you know what? This is to me, it's the person is being a con artist, right? And I'm sorry, I get a little emotional, but it's just like, because I'm so sick and tired of all these fake gurus that with all these fake indicators, upselling courses, upselling stuff when they suck at trading, when they don't know how to read price action. And people that's been down for the year. So if you're not able to make money, how are you able to come up with a new course and teach people how to trade stocks, how to trade options? How is that possible? Right? I'm not gonna mention no names, fam, but hey, you don't need to go far away to find who these crooks are. You don't. Google, YouTube, Trustpilot. Before guys signing up to any service, do the homework, right? Check the reviews, see what people are saying. And you know what? Ask them prior to joining the service. I want you to provide your brokerage statement from the broker firm, because otherwise I don't even believe in and if that's just how bad it is, family. So unfortunately, this trading alerts services, like trading, courses, it became like the nastiest, filthiest, dirtiest, and easiest way to rip people off, because they're promising you the American dream, the get rich quick scheme, right? But hey, there's a way to consistently be profitable every single day, 24/5. We don't trade 7 days unless we're trading futures. There's a way. And the way there is, it's none of the ways that you've seen on the internet. It's none of all these big companies are teaching you. That I can promise you. And listen, whoever, any of these guys, any of you big guys, big crooks, if you guys want to come after me, if you guys want to trade me live, I'll embarrass you live. I'll trade you live. Just stop scamming people. Stop ripping people off. Right? Any of you big guys, you guys know what I'm saying. You guys know I'm talking to you. Trade me live. Let's stream it live on YouTube or on your platform. Yeah, let's do it. I'll embarrass you in front of the world. Right? So sorry, family, I got a little upset here. There's some crazy stuff going on, with some crazy people. But this is the lesson that I wanted to leave for today, right? I hope it's going to shed some light, right? Remember, always look at the expected move for the, for the stock, for the option. You see that on the option chain. That same week, if you're trading real stocks, you don't have to worry about implied volatility being too high or too low. You're trading liquid stocks that are traded by the smart money, by big institutions, right? So do not worry about that, right? Don't be so foolish to be looking at, guys, let's watch the tape reading. That's the biggest waste of time ever. Losers do that, right? Losers do that. And look at the option price, looking at the option chart. That's what losers do, because they don't know what they're doing. They don't know what they're doing. And I want to send a message here. Hey, Chandler, congrats on trying to steal my stuff, man, but you did such a terrible job and you suck as a trader. You do suck as a trader. You're not even a trader. You're nothing but a gambler, right? Good luck on trying to steal what I had been teaching for a while. But you did a terrible job, and you know what? That was not even 0.00001% of what I know, because I knew you were a rat since the beginning. Just a jealous, selfish person, a loser. That's what I call you, a big loser. All right? Chandler Horton, I'm talking to you. This message is for you. All right, fam? So, all right, you guys be safe. I hope you guys get something good out of it. Stop reading the tape. Stop looking at the option prices. You know, and just know that the new course that did this person came out, it was trying to steal some of the stuff I was teaching, but he sucked so bad that he's done a terrible job, right? All right, you guys have a great evening, a great weekend, and I'll be in touch with you guys again sometime next week. All right, be safe, fam, and take care. All right, peace.